All right, guys. Today I just wanted to make a short video about how rate cuts have a tendency to cause a recession. And you can think of this reason, that reason, whatever. The basic fact that it boils down to is, for whatever reason, rate cuts are at least disinflationary. For some reason, when rates start getting cut, people start paying off debt, and when they pay off debt, and I don't know why they pay off debt when rates are getting cut. Maybe they're waiting for, I don't know, rate cuts to get to a low so they can reinvest in stocks by taking out a secured loan against their house or whatever, and then investing it in S&P or the NASDAQ or whatever. But as you can see, especially recently, but it happens even further back, rates go down, and these shaded areas are recessions, right? Now, there's more recessions than that, but this is defined. A recession, according to the Federal Reserve's website, is I think a 20% decline from the high of the S&P 500. But every time they cut rates, there's a recession while it's falling. See, right here, dot-com crash. Look, rates were at 6% in the 90s. Get cut down to 1%. There's a recession. Rates start going up during a bull market. Guess what? Rate cuts happen. Recession. Rates bottom out. Giant bull market. Rates get cut. Well, that's COVID, so they got cut because of COVID. But anyway, so that one, the recession came first. But anyway, rates go up. Now, there was a recession in 2022 as well while rates were going up. But it seemed like by raising rates, it stopped the recession. Guess what, though? Now they're talking about possibly cutting rates this week, right? So what do you think could happen? If they start cutting rates 25 basis points per meeting, or even at a slower rate than that, but if they keep decreasing them, then there's probably going to be a recession. If they cut them once, that's not a guarantee they're going to cut them again. But it's a good indicator that they could start cutting them more and more. So what I see happening this week, if they do cut rates, is that you're going to see algorithms are going to run price up past high of day during that Fed thing. A lot of people are going to get baited in long, and then they'll probably start to flush it. That would be my guess. If of all the tricks they can do, my guess is that if there's a rate cut, you're going to see the market pump up really fast at 2 p.m. and then it's going to bait in a lot of longs, and then it's going to flush. Okay, so I would wait for that rate decision to come out. If the market buys up past high of day or something like that, I would then look to get in short. Now, look, I'm not a big proponent of shorting the NASDAQ, but I'm telling you that there are a few cases where you might want to, and this is not financial advice. Do your own due diligence, but rate cuts are one of the biggest signs of a recession. Even though that's the complete opposite of what the media says, which if you've seen my channel, ever since I started this channel, the basic premise upon which I built this channel was that things like the news media are there to encourage you to make the wrong side of the trade, that they have special interest groups that control these media outlets, and the people controlling them are on the other side of the trade that they're promoting, right? Because it's a zero-sum game. So anyway, look, people think everyone is so convinced that rate cuts are a bullish thing, right? They're bullish for the market. It can't be true then, right? Because if it was true, then everyone would make money. Well, who are they making money off of? Because somebody has to be a loser for them to be a winner, right? So just this is just my 2 cents. I could be wrong. History indicates, though, that I'm correct. If a rate cut comes this week, I would expect the market to begin selling off shortly afterwards, okay? And not until rates bottom out, most likely, would the bear market end? And I mean, we just had a big bear market in 2022. As a matter of fact, let me say this: the bear market in 2022 on the Nasdaq, from the high before that bear market, from the high in 2021 down to the low in 2022, that decline was bigger on Nasdaq than the decline that the Nasdaq experienced during the financial crisis of 2007 to 2009. By almost a whole percent, the 2022 bear market was bigger for Nasdaq than it was during the 2008 crisis. Nobody is pointing that out. I did the math. It was a bigger percentage decline for tech stocks in 2022 than 2008. So they already have recently had a very sizable recession 2 years ago, right? So that seems pretty recent. Don't know if that's been enough time for another recession to happen. I will say that, but I can't lie. Rate cuts are bearish, and it looks like a rate cut is probably coming this week. So I know this is not a popular opinion. I actually got laughed off of Reddit for saying this about 6 months ago, but I said if they start cutting rates, the market will sell off. That's my prediction. I could be wrong. I guess we'll have to wait and see. But I will probably put some money on that bet. If they have a rate cut, I'll wait for a price to drive up into a premium and I'll sell, which is what the institutions would probably be doing also. So, hey, that's, I don't know. But that's all I really got to say today, guys. Nothing too fancy. It's just, if you look at history, every time the rates are going down, the market tends to go down. Why? I don't really know. I'm not, like, interest rates to me, it's like, I don't really see why that cutting rates is disinflationary or even deflationary. I don't know. But I guess it is. But yeah, just look at history. Every time there's a rate cut, there's a recession. Every time there's a rate cut, there's a recession. Look, every recession, every gray line on this, there's rates are in a decline when a recession happens. So, I mean, it doesn't take a genius. Doesn't take a genius. See, shaded areas indicate U.S. recessions. So, yeah, it's really not rocket science. Just look at the data and you'll see that everything that people believe on Wall Street Bets is wrong. But anyway, yeah, take care, guys.